Good morning, MegaWhale team, and welcome back to the channel. I hope you're all having a fantastic day. Over the past 48 hours, we have seen an immense amount of volatility, with the short-term price action fluctuating between 107,000 US dollars and 102,000. With this mass amount of short-term indecision, chop, and volatility, sometimes the best thing to do is to zoom out, and that is exactly what we're going to be doing in today's video. When in doubt, zoom out. We are going to be focusing on the higher time frame charts, discussing the significance of the weekly range break at 105,000, discussing potential macro targets for Bitcoin, and of course going over the total altcoin and total cryptocurrency market cap. We'll also briefly discuss the short-term price action, going over the recent volatility, and discussing potential short-term targets. Before we go ahead and get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in taking your trading to the next level, join us in VIP by clicking the pinned comment of the free channel, contact our admin, check out our 50+ month trading track record, or check out a 10-minute video showing you inside the channel. You'll get access to two channels, the main trading channel and the exclusive group chat. We have over 700 members and have been operating since 2021. We'll love to see you in there. Let's jump into the video. So as we can see, a lot of volatility over the past 24 hours. There is some speculation going around that this volatility may be a consequence as a consequence of the credit drop for USA, of course, dropping from a AAA premium to a AA+. We have also seen President Donald Trump discuss the potential for a trade deal with Russia, and even posting very recently, about 3 hours ago, that they are going to move towards negotiations for a ceasefire in Ukraine. So we have seen some potential bullish narratives here develop, which have sparked a little bit of an upward move for the market over particularly the last few hours. So that explains a lot of the volatility of the weekly open being quite bloody as a consequence of the credit drop, and then of course the price pushing up more recently in the last few hours as a consequence of a potential trade deal with Russia, and of course a ceasefire. So a lot of news related volatility. And when you look at a price chart like this, you can really see how indecisive and how uncertain this price action is. It's not moving with any clear structures. It's not respecting key levels besides, of course, our 50 EMA. And we are seeing a lot of volatility. And it's generally pretty acceptable, should I say, pretty common when we see a lot of interference from news events and external global geopolitical events that are occurring. So let's go ahead and kind of avoid all that for now. We'll come back to that in a second, but let's focus on the market data and then move over to the macro chart. So 24-hour volume and liquidations, of course, have moved a little bit over here as a consequence to all of this news and all of this volatility. We're looking at volume over here. Volume is up 5% at 325 billion, with liquidations down 40% at 313 million. Of the 313 million, 200 million coming from longs, 113 million coming from shorts. Looking at the DXY, the DXY has dropped into the weekly over here a little bit, so quite red on this weekly, pushing back down to retest that change of character level. Again, provided we sustain above our change of character, which is sitting around 100, we may see reversals back to the 200. If we drop back below this change of character, we do expect the next leg down for the DXY to resume. Moving over to the S&P 500, a fantastic daily candle yesterday for the S&P 500. It started off relatively bearish, having engulfed our prior daily breakout, but we ended up engulfing it toward the upside, so sustaining this level as an area of support. absorbing a lot of the selling pressure that was occurring yesterday, actually closing higher than our prior closing price. So looking very, very bullish, coming up to retest 6,000. Again, the expectations are that if we remain above that change of character break at around 5,930, that we will eventually see rallies into this 6,100 to 6,150 level, which is essentially this prior all-time high. So overall, it is still looking very bullish. And for the S&P 500 to quote-unquote turn bearish, we would need to drop below a prior lower high. At the moment, the most recent lower high is sitting at around 5,600. So provided we sustain above 5,600, the macro expectation is upward. If we drop below 5,600, we run the risk of a steeper correction into these prior lows at 5,200. But overall, expectations are of course bullish for now. Moving over, guys, let's jump into the Bitcoin analysis. Like we said, we are going to be briefly going over the short term as we are breaking out here. Even though we had this fake out, we are now still sitting above that key trigger point. So we do have a very good chance of continuing upwards over here, which we'll discuss in today's video. We're also going to be taking a look at the total altcoin market and total market cap as respectively, they both were able to bounce. Or should I say, avoid breakdowns of critical levels of structural and technical support. And then of course we have Bitcoin getting back above that range high. So before we get into the crux of today's analysis, make sure to go ahead and sign up to BitGet, BitUnix, or BingX. These are the exchange links down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45%, all based on your trading volume. You'll go to support me making this content on a daily basis. And of course, you'll be trading exchanges I trust, supporting yourself in the process. So go ahead and check it out. We'll play a quick ad and we'll get right back into the video. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay guys, let's go ahead and get stuck straight into the video, starting on the total cryptocurrency market and total altcoin market cap. So as we can see guys, from a horizontal perspective and from a trend-based perspective, we are very much still in an overall uptrend for both these markets. Of course, with the total market cap establishing a diagonal trend line as represented by this trend line over here, sitting not only above our diagonal trend line, but of course also horizontal levels, we are looking pretty strong. Now, over the last few days, we have seen a degree of exhaustion, of course, printing both red dot prints on both these indicators, signaling a degree of weakening bullish momentum, and then eventually seeing a breakdown of that RSI, which subsequently resulted in a correction to retest that 3.19 trillion, which has now been able to sustain as a support for around 4 to 5 days. So we are seeing a lot of buying pressure step in at these levels, which is a good sign. It means these levels of support are still holding support and demand is still being found. At the moment, we can see the total market cap is pushing in a horizontal consolidation against this $3.3 to $3.2 trillion level, with a apex occurring on the uptrend around about the 30th of May. So we do have a time horizon for a potential breakout that is going to be the 30th of May. We do expect a break toward the upside or a break toward the downside to occur before the end of this month. So we are poised for a potential large move in either direction. When we're looking at the total altcoin market cap, we have to expect the trend will continue in the direction of which the trend is continuing until proven otherwise, meaning while we are in an uptrend, the probabilities are skewed that the price action will continue upwards provided the trend is intact. That means while we are sitting above this diagonal trend line, we do have a slight probability, preference in terms of probabilities for a continuation toward the upside. If we are looking at our horizontal levels, this is going to be a major level of support at 3.19 to 3.33. Of course, if we are able to sustain this region, our next level of high time frame resistance is all the way up at around 3.57 to 3.75 trillion. So we have a massive potential move toward the upside for both Bitcoin and the broader cryptocurrency market if we are able to see a breakout here for the total cryptocurrency market cap. So the level we need to break out to see that next leg upwards, and it's going to be the next leg up for not only Bitcoin, but guys, the next leg up for the cryptocurrency market as a whole. We need to break through 3.33 trillion, represented by that daily high range on the total cryptocurrency market cap. I'm going to go ahead and zoom in a little bit just so you can see a little bit better. That daily high range represented here by 3.33 will need to break. So provided we sustain above 3.19 to 3.25, the probabilities are in favor of an eventual break toward the upside, expecting moves to 3.5, 3.6, 3.7 as a consequence. That is the bullish case scenario, and that is what is more likely currently. So let's talk about the worst case scenario. For the total cryptocurrency market to turn bearish and for Bitcoin to then correct and the altcoin market to pull down further, we would need to see the loss of this 3.19 level in conjunction with the loss of the overall uptrend. Okay, so we break the uptrend, we enter a downtrend. We break our support, we can confirm deviation above, and we will see a reversion toward the downside. So until both of those things occur, we do not expect a correction lower than 3.19. That does mean we may see short-term volatility toward the downside, some selling off that may occur. However, on the broader picture, the bigger scale, we are looking bullish above 3.19 trillion. So lose 3.19 trillion, then we can become very concerned about corrections. Sit above 3.19 trillion, we are more or less going to be expecting the price to continue within this chop range, okay, and break through 3.3. That is when we expect that next leg up for the whole market to resume, or should I say just kick off. Moving over to the altcoin market, so just as the total cryptocurrency market was able to save itself from a potential steeper correction, bouncing from 3.19, the altcoin market did more or less the same thing, but the key level we've been watching here on the altcoin market is going to be this baseline of the Ichimoku cloud. So the baseline of the Ichimoku cloud is going to be this orange line over here. You can see we broke through. We've been holding above ever since we broke out of this macro multi-month downtrend over here. So we're holding above that baseline. At the moment, the expectations for altcoins are looking okay. We're not particularly massively bullish on altcoins right now. We're more or less sitting neutral. The next point in time where altcoins will have that next rotation. So if you haven't paid attention much to the market over the last year and a half, what you've been noticing is we have periods where altcoins catch rotations, then bleed off aggressively in comparison to Bitcoin, and then catch rotations, and then bleed off aggressively and catch rotations, and etc., etc. We haven't seen this consistent multi-month rise in the majority of altcoins. We generally see money rotating from some to another, and we see this situation where, as a consequence of there being thousands more altcoins this cycle than last, the amount of money just has to simply be more diluted across a much, much larger pool of altcoins to invest in. So we see more of a rotation cycle than we do see what you would consider a traditional altcoin season, where pretty much every altcoin season goes up immediately and together. So in this instance, for that next leg up for altcoins, for us to see altcoins on average rally 15, 20, 30, if not more, percent-wise, we need to see 940 billion break. So anything below 940 billion, what we are going to see, anything below 940 billion to the baseline, we are going to see some altcoins do very well and some altcoins do very poorly, okay? And we'll see the majority of altcoins kind of hang around that middle level where they're chopping, they're going sideways, consolidating, and slightly going down as a consequence of Bitcoin dominance rising. If we break through 940 billion, that is when we will see Bitcoin dominance decrease, and we will see the total market cap increase, and thus we will see the altcoin market cap increase exponentially against the Bitcoin pairs, and we will see the altcoin rally resume, okay? We will see another small, maybe multi-week, 1, 2, 3, 4 week rally for altcoins, just like we saw over here, where we saw 15, 20, 30% gains for the majority of altcoins. We believe that will start when the altcoin market breaks through 940 billion. If we lose the baseline of the Ichimoku cloud, we would then expect altcoins to bleed off more aggressively back to retest 840 to 820 billion, and as a consequence of that, we may see the total market cap drop back down to 3.19. So again, the more we see the total market cap chop, the more we see altcoins run the risk of bleeding off against Bitcoin. But if we see all of this go upwards in these large movements, we generally see rotations occur to altcoins more aggressively. So that is what we're watching out for the altcoin market. Let's jump over to Bitcoin. So taking a look at Bitcoin on the short term, as we mentioned, a lot of volatility is occurring as a consequence of these recent news events. And as we mentioned at the start, we do expect Bitcoin in the short term to actually continue upwards here. We already have seen that price action trickle upwards over just the last 10 minutes of filming. So as you know, guys, this trigger point was sitting at 105,000. Anything above 105,000, we're looking for 108,000 targets. So we still do expect, if Bitcoin is above 105, we are expecting it to move into 108,000. That is still going to be our current expectation. And as we mentioned in our yesterday video, the invalidation for that is going to be one of two things. We are watching for losses of most recently established lows, okay, in conjunction with the 50 EMA. So if we look at what we saw in yesterday's correction, right, we saw the price drop down to the 50, but we didn't see the price drop below these structural lows. These most recent lows, these equal lows, these are the trigger points for the price to correct much further. So just as these equal lows were the trigger points, we now have a new higher low. So for Bitcoin to quote unquote turn bearish on the short term and see more aggressive drops, we would now need to be losing the most recent higher low, which is sitting around 102.8. So if we lose 102.8, that will now be the trigger for a steeper correction, not these levels over here. Now, that is very unlikely as Bitcoin is, of course, pushing through these most recent highs. We are back above 105,000. We're looking very, very strong for a continuation up into that $108,000 region. So in the short term, I am expecting this trend to continue up into 108,000. We might see a quick liquidity grab above here, maybe then mean reversion back down before we continue upwards. But of course, if we eventually break back below this region, that and only then is when we're going to really expect market-wide corrections for Bitcoin and the altcoin market. Until then, bullish sitting above. Moving over to the macro charts, and this is where it gets very interesting. The macro charts are looking very, very good. Now, as we can see here, guys, and as we talked about in our prior video, we are following a very similar pattern to what we have seen play out now for the third time during this entire bull run. And that pattern is very simple. It is a period of expansion followed by a period of compression. First and foremost, we had compression in the falling wedge, okay? This was the end of the last bear market. We had expansion, we followed into compression. This was a sideways consolidation, a horizontal consolidation. This is about 8 months. We then saw expansion upon the breakout, moving into a descending channel formation. This is again around 8 months. Again, compression. We then saw the breakout and we saw an expansion toward the upside, only then to see a 2 to 3 month horizontal consolidation followed by a sell-off into the Gaussian channel upper band, and then a breakout of that multi-month downtrend, moving back into expansion. So what we are seeing is, again, expansion into compression, consolidation, absorption, and then expansion, repeating over and over. If we look at the RSI through these times, we have noticed a very similar thing, and this is something we talked about a lot a few months ago. We talked about how that the breakout on the RSI on the weekly was going to essentially trigger the next leg toward the upside. And you can see right over here, if we draw horizontal rays or vertical rays, from the point at which we broke out of these RSI's levels, these essentially mark the major reversal points of the price action. If we take a look, reversal point number 1, we gained a total value of around 142% from that RSI breakout. Number 2, we gained a value of around 66% from that RSI breakout. And number 3, we've gained already a value of around 25% from that RSI breakout. So we can see how that breakout shifting into positive momentum, which is signifying that the selling pressure during these consolidations have officially been absorbed. The price has seen dramatic reversals toward the upside. Now, that is just one part of the puzzle. If we look at the second part of the puzzle, I'm going to go ahead and get rid of these indicators to make this a little clearer. We can take a look at our weekly ranges. So taking a look at our weekly range, I'm just going to go ahead and delete everything except the weekly ranges really quickly. The weekly ranges are going to be the horizontal high points. Okay, the horizontal high points, the highest weekly closing price within the consolidation prior to the breakout. So our weekly range is going to be here, our weekly range is going to be here, our weekly range is going to be here. If we take a look at the weekly range, we eventually saw a breakout of the weekly range occur after the breakout of the RSI. Now, if we're tracking when that weekly range broke, we can see it broke around when the RSI broke through the 62.09 on the RSI. We broke the 62.09, we saw a weekly range breakout. We broke the 62.09, we saw a weekly range breakout. We broke the 62.09, we saw a weekly range breakout. Upon the weekly range breakout, we then moved into an expansionary move into a new macro consolidation. So if we were to follow the same pattern we have seen before, we are about to enter the next leg toward the upwards on the macro, which will then result in either a new consolidation, which will result in then a continuation into expansion, or a consolidation, which will eventually mark the end of this multi-year uptrend. Just like we saw this consolidation mark the end of the multi-year downtrend, eventually we're going to enter a consolidation which will break toward the downside. That may occur at the end of this expansion. If we take a look at something like the 4-year cycle, I know the 4-year cycle is old news, it's boring, but the reality is the 4-year cycle is still in play, because to invalidate the 4-year cycle, we would need to create a new low prior to this date range trend breaking. So at the moment, the 4-year cycle does suggest the 6th of October 2025, we will create a new all-time high, and only after the fact can we actually validate whether or not we are following or not. So it's hard to say for sure. But if we take a look at this, we do have this multi-month range over here where we do expect an expansion toward the upside, and we do have that data to suggest it is possible, and it is based in, again, historical data based on what we have seen play out before. So there is a chance we do see an expansionary move toward the upside, and this data over here based on momentum is telling us that yes, it is very likely we see an expansionary move toward the upside. The next big question is, well, how high could Bitcoin go? And then, well, what would need to happen to invalidate it? So the invalidation is very simple. For us to invalidate it, we need to see something we haven't seen before. And simply that is going to be a weekly close below the range. So if we see this weekly candle close in 6 days' time, close back below this range, in my eyes, that is going to be a sell signal, and I'd be expecting a correction for Bitcoin. If we do not do so and close above, in my eyes, that is going to be confirmation that we are going to continue upwards. So a lot does rest on this short term now, but it is getting very, very interesting for Bitcoin. So potential targets for Bitcoin based on these expansion moves is very hard to say. We went, what, 120%? We went 60%? So maybe 30%, right? If we're just halving, maybe we see a 30% rally from the breakout point, which could take us into 115,000. Okay, maybe we see 115,000. If we take a look at the RSI breakout of 62.09 and look at historical performance upon breaking of the 62.09, the minimum return we have seen every single time we're breaking through is 10%. So a 10% breakout from this range would take us again to 115,000. So maybe 115,000 would be a realistic first target, provided we sustain above the weekly range high. As you can see, the weekly range high is broken, above, bullish, invalidate below. We do expect a potential correction downwards, as by doing this, we would, as a consequence, not hold the baseline, as a consequence, fail to sustain above 3.19, and that would be the trigger for this entire rally we have seen since August fall apart. So watch closely, pay attention, and of course, when in doubt, zoom out. Thank you for tuning in. Have a fantastic day. Catch you guys on the next one. I'll see you then. Bye.